Good evening, traders. Can you hear me all right? Loud and clear? Thank you, Sri. Thanks a ton. Thanks, Sharad. Thanks, Ram. Thanks, Chino. You can also see my screen, correct? Thanks a ton. Thanks a ton for your responses. Thank you, Sharad. Thank you, Sri. On behalf of NP Financials and Go Markets, I welcome you all to this step-by-step approach to trading revealing session. I thank you all for taking time out from your otherwise busy timeline and for attending to this session. I'm here to share my vast trading experience, as Yazdi said, so that you can understand and take appropriate and effective steps to get started and become a professional trader. At the end of this webinar, you will not only come to know how to get started, but also probably leapfrog your journey to become a professional trader with our help. All right, first thing first, we need to go through our general advice and risk warning. NP Financials Pty Ltd. As you can see, we are in Brandon Park, Victoria. Our web address is npfinancials.com.au. Advises all service recipients of the following. The information is provided only on general advice basis. This is only educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. Let me give you some time to go through the rest of it. All right, now that you have gone through it, for newcomers into this webinar, my name is Partha Banerjee. I'm a full-time professional trader, prop desk trading for last 7 years. Those of you who don't know me, my trading experience comes from having completed 15,000 hours of market time. I mentored and coached more than 800 traders like you. I've written 2 books for Forex Trading, which is available in our website. And I'm writing 2 for stock CFDs, how to trade commodities also. And I've developed crucial intellectual properties in the process. I've done my certified financial technician. I'm holding a diploma in technical analysis. I've delivered about 300 2- and 3-day seminars. I've conducted about 250 or more 1- and 2 days live market boot camps in which I used to share my trade ideas, and traders like you used to consider that as a trading. These trading ideas now we consider in our client area, which I'll talk about a little bit later. I have general advice in derivatives, specialized techniques in technical analysis tier 2 and tier 1 technical analysis. I've completed my personal advice requirements foreign exchange, but today I'll be only talking, whatever I talk will be general advice only. Australia is a wonderful country. This is my 11th country of work, being an engineer and working in Siemens. I settled down in Australia because we speak English and it's such a wonderful country, and this country requires for speakers like me and professional persons like me to have certain degrees so that you can present to others your knowledge. One of them is, all of them are required in front of you. One of them is the compliance solution in specialized knowledge securities. That means it is required to talk about in share trading. Before this, I was a global business leader. I did my PMP from PMI. I used to say I am a bachelor of engineer. I have forgotten engineering. I only remember the discipline and control part of it. That's important in trading. And I have also done diploma in financial planning. All these are not required for trading though, but it is required to deliver a general advice. This discussion will be approximately for 60 minutes duration. You may ask your questions anytime, stop me anytime and ask me through your chat section or through your question sections, or at the end of each slide, or park your questions till the fag end of the discussion. Please raise your hand through chat or through questions. If you do not understand what I said, I'll be more than happy to explain it further. Please let me know if I speak too fast, because if I'm talking about trading, I can be emotional and not passionate. I can be passionate, not emotional, and tend to talk fast. So slow me down. Or if I talk too slow because I'm not getting your response, then if you miss something which you may want to repeat, I always say, please do not choose to suffer in silence. So let's get started. I'll talk about how to break the threshold. Threshold means where are you, how to know where you are, and how to get started from where you are and then go forward. I'll set the groundwork which is exactly required to get started in trading. I'm big on psychological aspects because I've seen hundreds, even actually close to thousands of traders come to me, and I've seen psychological aspects before and after, especially after dealing with real money, can be extremely important, because market brings our very own characteristics inside out. It tells us actually who we are from perspective of how greedy or not greedy we are, how fearful or courageous we are inside, how indisciplined or disciplined we are, and etc. Then from slide number 8, number 4 is in front of you, I'll talk about steps 1, 2, 3, 4, 4-step approach to get started. I'll also touch upon how an amateur starts, or with what approach an amateur starts vis-a-vis how a professional starts. Both of them starts, okay? This is exactly correct. The secret of getting ahead is getting started. I always say get start. You must start. If you have $100, start. If you have $1,000, start. If you have $1 million, start. But start now. That is why it is extremely important to getting started. I'll touch upon rules and discipline of trading. How to manage money and risk in trading, because this is the game or the business. Since I enjoy this business so much, it's my passion, it's my love. I say it's a game. I play and enjoy. Here I'll not only tell you the parameters of risk management, which I personally do, but also how your deep-rooted association with money will play a very important role in trading. For example, you all start with certainty. We look for home and food and clothing through our 9-to-5 job, and when we are satisfied, we got our certainty, although we had some mortgage, then we look for variety. That's why we are starting to look for trading through grow markets and into financials. So certainty, variety, and the next cycle is growth. So all right, so I got the professional approach to trading. Now I'll grow from 0.1% to 0.5% to 1% to 2% to 3% a month. Although 3% is very good. And then either you go after growth, the next cycle is either you go for significance, which is useless. Don't ever try to do that. Don't even try to put yourself in a significant position from money perspective. But the other one which comes after significance is contribution. So if you want 10% from trading, your one goal can be give one at least out of that 10% to the charity, your preferred charity. Remember, procrastination and misery are twins. So get starting is so important. I'll put everything together towards the end, and I'll show you whatever I discuss, how to do it through examples, and I'll help you to get connected to get help. All right, let me quickly start the ball rolling by posting a few simple questions so that we can get started knowing each other better. Just answer through chat or question section, yes, no. First question, here we go. Who is trading professionally now? I'll give you 5 seconds. Thank you, thank you, thanks for your response. Second question. Who is trading part-time and working full-time? Very good. Thank you very much. Thanks, Tino. Thanks, Sri. Thanks, Sarat. Thanks, Ron. Now, next one. Who is not ready to trade yet? Be honest to yourself and just say yes, no, not yet. Maybe in 1 month time, maybe 15 days time, but you must be very honest with yourself. And the last part, not the least, this is the penultimate one. Who wants to learn to trade like a professional? All the hands goes up. Yep, that's good. Very good. Thank you, Colin. Thanks, Tina. Thanks, Sri. Thanks, Sarah. Very good. Excellent. Fantastic. Thank you. Who is stopping? No, what is stopping you from trading consistently? You don't have to write me because this can be a lengthier answer. Maybe you can show me in our competition section towards the end of this. Okay, thank you very much for your participation. I really love it. All right, knowing and breaking the threshold. Crossing the threshold is a process. It will come both from your market understanding, the structure, the dynamics, which I'll talk in details, and when you develop sync between the market understanding and your understanding, your self-understanding, being in self with your body, your mind, your heart, your soul, your spirit, and with the outside world related to your trading, like your broker platform, like your internet, like your laptop, and so on and so forth. I'll guide you in this webinar how to go through this process step by step, since it involves knowing and working on your history, which has already been embedded in your life from experience, and from that history how you are going to produce positive or negative thoughts, that is your psychology. And based on your positive and negative thoughts in mind, that means the psychology, which will actually produce physical chemicals in your brain, good or bad. So that is your physiology. So from history to psychology to physiology, and based on this physiology, good or bad imbalance of chemicals in brain, we shape our beliefs about everything we do, which becomes our philosophy. We need to identify the challenges. Challenges can be internal, for example, greed, fear, lack of discipline, self-control, external, or can be external, like lack of understanding of market structure, dynamics, how it is mapped, what are the inner mechanics of the market, which can be my next webinar topic. All right, I always say take small steps to begin with. Start with a small account size, maybe $1,000, maybe $2,000, $10,000, I don't know. Prove it to yourself that you are consistently profitable for 3 months before topping up the account. Supposing you start with $10,000 after getting the required amount of training from us, and then you are consistently profiting 3 to 6 months, then you can top it up 15,000, 20,000. 1 or 2% to start with per month is an excellent. If you go to visit IASG, India, Apple, Singapore, Google.com, you will find that and actually what the website does, actually it judges presents the mutual funds return, and you'll see probably it is not than 12 to 24%. 24% is very high. Now this is extremely important. You need to start to accept, approve and appreciate yourself as a trader. This is extremely important because it needs to be internalized yourself as a trader. Declare to the universe that you are a forex trader. What your mind can conceive and believe, you will achieve the same. Practice, practice, practice. If practice not helping, then get yourself coached or mentored by a professional like us. The knowledge in trading will come from your mentor, who is a professional trader trading for living, and who is there to help you whenever you want it. If you have any question, just type in. Don't worry, I'll answer it. All right, now next is the setting the groundwork to get started in trading. Ask yourself, take your self inventory. What is it that attracts you most? Is it technical analysis, you're passionate about it, or the fundamental know-how of the market? Remember, fundamental drives the market, but technical actually guides the market. I'll give you an example after the next point on the difference between technical and fundamental. State of mind. Your state of mind discussed in previous slides will make you or break you as a trader. As simple as that. Never allow to grab defeat from jaws of success. Do just the opposite. Perception affecting the market move is the single most important factor in trading. When Japanese Prime Minister Mr. Abe said that they want to see Japanese yen's fair value as 100, you know what yen was there that time in 2011. It was 75, 77 before and after the tsunami hits. So from 75, 76, 77, it went up to 125. So that's a 5,000 pips drop, and then it came down to 50% drop of 100, and then now it is 112. Much before Britain's exit from European Union, sterling was sliding from 1.7192 till it reaches 1.18, a fall of more than 5,000 pips. I love this 5,000 figures. Will it retrace 50%? I don't know. We will see, and market will tell us. All right, Sarad is asking, are you a technical trader or a fundamental trader? Yeah, good question. I am a technical trader, 100% technical trader, because the fundamental will never allow you to take a trade, put a stop loss, and book a profit. It will probably guide you as I guided you, or it may, because one thing is you need to think very simple, because trading is not rocket science, Sarad. It's very simple, man. That's why it is difficult. It is most difficult to do the simplest thing. When Abe declared, as I told you, that Japanese yen should be 100, that time Japanese yen was forming a inverse head and shoulder at around 75, 77 in a monthly chart. If I get time, I will show you that. And my technicals exactly told me where to get in, where to put the stop loss, and where to put, scale in a trend, and so on and so forth. So I'm a 100% technical trader. I don't bother about fundamental. It is not required. All right, psychological aspects before and after starting a trader. Thank you, sir, for asking a question. Please, we all start with unconscious incompetency. When I started trading 15 years back, being a 9-to-5 slave in an international company, corporate house, I was not only incompetent, but I was unconscious. How dangerous it is. I'm incompetent as well as unconscious. But after interacting with market some time, then I realized, all right, I'm incompetent, but at least now I am conscious. Market taught me that. After that, I try to learn as much as possible, as you are doing now with me, to become consciously competent. I'm competent now, and I'm conscious. And the last stage is a difficult one, because this competency which you are consciously doing now has to be put it into your automatic brain. I call it automatic. Some people call it unconscious, subconscious, superconscious. I call it automatic, because that happens automatically. As we drive, we can drive and gossip for 60 minutes. Same thing when we brush our teeth. That's automatic brain. Never ever suffer from fear of missing out, because market will give you another opportunity, and fear of losing money, because this is a business. You will lose some, you will gain more. So losing money is a cost of business, gaining money is a revenue. I'll show you how to calculate that and how to derive a meaningful derivation out of that. Expectation. Out of thousands of interacting with people, thousands of people, I have seen, before that I need to tell you, I told you I'm an engineer. In engineering, I read barely 55 to 60 books for 4 years. In trading for last 10 years, I have been reading I've almost read more than 300 books. And the best line I got of them is from Ed Seykota. He writes, everybody gets what they attract from the market, even though they may not understand it and want to admit it. It is extremely important, because we don't admit, because how is the trading going? Good. Oh, sometimes bad, sometimes good, because of our ego. From my personal experience of 800 to 1,000 traders, I have seen most of them come to trading for getting excitement. Oh, it's going up, I'll buy. Or enjoyment, or empathy, or sympathy. Some people, very few of them, will come for pain, because they derive pleasure from pain. I hope you are not doing the same. Very few people I have seen come to treat this as a business, and those of them who have actually come to treat this as a business are successful. Fear of success. We have heard of fear of failure, but what is fear of success? With great success comes greater responsibility, and people are not ready to deliver that responsibility. Yes, this is correct. Take a sledgehammer, big one, and hammer the fear out so that the fear will fear you, not the other way around. One of the mistakes I have seen of the budding traders is not following the rules because they don't have the rules, because they don't know it. How do they write a rule? Because unless and until they are trained, and since they are not having a rule, they do not have a trade plan, they do not know the entry, exit, and stop loss criteria, and their portfolio management, risk management criteria, they started cooking trades. So I think this is 100% opportunity to go up. And then the next morning they have a stopped out condition. So never ever cook trades. Now this step 1, this is what we were waiting for. I hope you have understood the preliminary steps which I discussed before step 1, maybe step 0. Any questions? Your questions gives me an opportunity to drink water. Thank you. Yeah, people are good. Either you are getting everything or I'm explaining everything. All right, step 1. The 4 aspects of trading needs to be identified through 4 steps. Colin said all good. Thank you, Colin. It's a great idea to select the best asset class to trade out of the 5 available asset classes. What are they? The one can be Forex. The second asset class is commodity. Rough rice, wheat, corn, I don't know, shares. Third, BHP, Apple, Google, bonds, Bund, and all those treasury bonds. Yes, we choose Forex. Why Forex? Because Forex is as an asset class is the biggest and most liquid. The other important fact to be remembered about Forex is you can participate in at least 2 out of 3 daily trading sessions if you are an intraday trader. For example, Australasia session starts at 9 o'clock. London or European session starts at around 4 o'clock. Now winter, Melbourne time. If you are in Perth, like Sri said, he is from Perth, Western Australia, it is also possible to trade a brief overlapping of New York and London and European session. Another important fact in favor of Forex is that its peripheral cost of trading, it is extremely important. Understand? For example, commissions charged, carrying cost, basis adjustment cost, overnight funding cost through tomorrow next rate, cash neutral future adjustment clause. My goodness, give me a break. Are either not there or least compared to other asset classes. And Go Markets is one of Australia's original MT4 Forex broker. So who else offering the powerful MetaTrader 4 trading platform? And Go Markets provide a low latency environment coupled with their extensive price feeds, so you can execute your trading plans with precision. And the last asset class here is indices. So in step 1, we select Forex. Indices, you for example, Dow Jones, and you can actually trade US dollar as an index. It is a composite of, I'll tell you now. 4-step approach to get started. Step 2. The first step is decided, then the step 2 is to identify instruments within the asset class of step 1. It is a good idea to start with 4 straight and major currencies, although Aussie is not a major. Other 3 are Euro, USD, Euro dollar is a major currency, Sterling or Cable or Great Britain pound, GB is for Great Britain, P for pound, AU for Australia, D for dollar, US for United States, and D for dollars. Easy to remember. JP for Japan, Y is for yen. All right, so the other 3 components except Euro, Sterling, and yen of US dollar index or basket are Swiss franc, Canadian dollar, and Swedish krona. So Euro, Sterling, yen, Swissy, CAD, and Swedish krona. The straight USD related pairs are much better because to start with, because they can be better understood and better remembered from their currency characteristic perspective. Each currency, for example, Aussie is very different from Sterling, yen is very different from Aussie, Euro is very different from Sterling, whether it is an impulsive move, on corrective moves, or in trending or in ranging. They are all different. So studying a currency characteristics, which is a big subject by itself, is an important one. Now, correlation between, before that, it is better to avoid the correlated currency pairs. So for example, what are the correlated currency pairs? Quickly I'll tell you, you can write it down. The correlation, if the currency pairs are having correlation coefficient more than 0.8 or 80%, they are correlated, they should be actually avoided. For example, euro yen are almost 98% correlated. Euro and Swiss franc, very high correlation. Aussie, euro Aussie, and sterling Aussie, extremely correlated. So that means what? Supposing you have a portfolio risk, not a trade risk, which I'll explain later, portfolio risk of 4%. So I'll distribute 1% to Aussie, 1% to euro, 1% to sterling, 1% to yen. But at the same time, I got an opportunity, Aussie, euro, Aussie, sterling, Aussie, same time. What do? You can either take 0.3, 0.3, 0.3 or 3% in each one of them, or just trade the Aussie full 1%. So avoid the cross currencies as much as possible, since they are synthetic in nature, since there is no country which will offer you a currency note which is written euro yen. All right, now this step 3. Once we decide the asset class, the foreign exchange, we have chosen the instruments, Aussie, euro, sterling, yen. The next one is to identify the time frame to trade. It is how to do it. It is an extremely important criteria to choose. These are very subtle. That's why traders actually miss all these things. It is extremely important to criteria to choose and operate in the correct time frames to trade, since it is very subtle and unique to individuals, as it is related and comes from our basic human qualities like our risk appetite, our patience level of the individual who is trading. Each one of us is different. Some may be risk taker, others can be risk aversive. Risk takers can actually trade a lower time frame. Risk aversive ones can actually do a daily time frame, for example. Similarly, each trader's patience level is difficult. Out of the 1,000 traders which I have seen personally, one-to-one, and trained them, I have found in a scale of 1 to 10, patience level can vary very widely. Those who score 2 to 3, that is very impatient, for them trading in a daily time frame can be a disaster because their patience level is very low. Similarly, for a person who is having a patience of an angel, trading 1 minute or 3 minute time frame can be extremely difficult because he is having a patience of an angel. So if you are trading 4 hourly, you need to be in front of the computer every 4 hours. So now winter time, it is 9 o'clock, and then 1 o'clock, and then 5 o'clock, and then 9 p.m. in the evening. Come summer, from December, it will be 11 o'clock in the morning, 3 o'clock afternoon, 7 o'clock afternoon, and 11 o'clock afternoon, evening. Easy to remember, 7-11. Right, and you can go to 1 hour, but my least time frame is 4 hours. Remember, in trading, less is more. The less you trade can be much better for you. All right, the last step. Once you have done the asset class, instrument, time frame, style, now the next one, big step, is to know the trading style, since it must resonate like the time frame with you as a person and your proper knowledge of the structure, dynamics, and mapping of the market understanding, which can be my next webinar topic. It is of paramount importance to know that in a scale of 1:100, how much time your chosen market trends in general, since rest of the time it would be in a range or slow sideways movement. If the market trending as per your backtesting, 30% of the time, 70% of the time it is in a range. So applying trend trading methodology in a ranging market is not at all a good idea. Similarly, applying a range trading strategy in a contra trend or a swing trading market will whipsaw you many more times, but you will not understand because this is very subtle. Another important fact is to know in details the design and characteristics of any indicator you might be using. For example, moving average, convergence, divergence, stochastic, RSI. I don't use any one of them till the time you are capable of developing your own. But please remember, any moving average related indicator, for example MACD, is best for trending market. Any range bound indicator for stochastic, RSI, because they have an upper band and a lower band, 20/80, 30/70, are generally used for range trade and counter trend markets. Bollinger Band can be used for both, if you understand that. Last but not the least, write and always follow your trade plan. Unless and until you write a trade plan, it is impossible to trade. And at the same time, you need to develop and maintain trade journal. I will show you both how to get started and how to move forward with trade plan and trade journal. All right, let me give you an example of risk management. I talked about portfolio management of 4%. Supposing you have a $100,000 account, your portfolio is risk is 4%. So you have, at any given time, you are happy to take $4,000 risk and go to bed. Or if your account size are 10,000, then the 4% will be accordingly $400. Now, in this example, account size is 20,000. So 1%, I'll never allow my students to go more than 1%, because that is my risk management, and because the name of the game is both patience and discipline, as well as preserve your capital. So for preserving your capital, 1% is the maximum, and the account risk we take. So it is $200. Now, for example, let us take a trade when the price was on the second bar here at 75 Aussie dollar 75 cents. We are going long, and we think, we have not seen the last three. We have at 75, we put a stop loss at 74. We don't know what will happen. So now let us calculate the trade risk. Trade risk is the difference between the entry and the stop loss. So here entry is 75, stop loss is 74, that is 100 pips. Better term is pips, percentage in points. Some people refer loosely it as points. So if it is coming back and hitting our 74, then we have a cost of business of 1%. So let's see, we have taken the trade on the second bar at 75. Then the third bar, we don't know what will happen, but we seem it. But in the left hand side, no one knows the right hand side, but everyone knows the left hand side of the chart. So on the left hand side, there was a resistance of 77. So we think, all right, my dear friend, it can go to 77. So our trade reward, we don't know whether it will go, but our trade risk while we are entering, why we are entering, is the difference between exit and entry. 77 is the exit target, and then 75 is the entry. So if we are hitting the target, we get 200 pips, that is 2%. So the reward to risk here is 2. Now the third bar comes, and it is a red bar, and we started hitting the market. Oh, I hate the market is going against me. Fourth bar, blue, a bullish, and it's a strong bullish bar. I love the market. Oh my God, I look at this, man. I go to office and say, oh, I'm making $150 profit, mate. This is such a wonderful trade I have taken. And the third bar, we hit 77. I love the market, man. It is so good. So in this trade, we got 2%, 200 pips. So that is how you calculate the risk and reward. You need not calculate. I will show you or give you a journal which will automatically calculate. Now, the thing which I told you is the trading style. One of them was trend trading. You need to first, how to identify, you need to first wait for the market to declare, I repeat, declare to you, knock at your door, that I am in a trend, by printing higher peaks and higher drops, higher peaks and higher drops. This drop is higher than this, that peak is higher than that for uptrend, and lower peaks and lower drop for downtrend. For example, this example is a higher peaks and higher drops after it forms a base formation. Base formation can be double bottom, triple bottom, quadruple bottom, and head and shoulder, inverse head and shoulder, so on and so forth. U, V, whatever you like it. For example, for uptrend, one price has formed the base. It will take time. Japanese yen took 24 months to hover around the Kobe earthquake 1995 support level of 75, 77. Before tsunami hits, it went down to 75 to make a new low. So once price has formed the base and then printed a higher top. This can be the higher top here. You need to understand what is a higher top. The only thing left out is to take the previous peak out. This is the peak out. I don't know whether you can see my cursor or not. This is a feature of go to webinar. Let me know. And print a new higher peak. So once these higher peaks and higher tops is printed, the only thing you can do is to wait for the reversal signal, my language, reversal signal from the dips, and buy, because the trend is already established. I will show you some of the examples. Thanks, Colin. It's good. That's good. Thanks. Good. All right. Now, talking about the next one, range market. Minimum 3 points are needed to declare a range. What are the 3 points? 2 swing lows. So, for example, this is a swing low, this is a swing low, this is a swing low, two swing lows, and 1 in between swing high. So the swing high, I understand that you know swing high, and if you don't know, then I'll probably take a next seminar or webinar. So the swing high, 1 swing high in between the 2 swing lows. So once this 3 points we got, and we saw some reversal. For example, those of you who are studying candlesticks with me know what is a bullish piercing or what is a bullish engulfing, what is a bearish engulfing, and the context is important. Without context, candlesticks are actually nonsense, useless, and must not be used unless and until you know how to draw the context. So once we have defined the context, upper band and the lower band, prices probably can be range. Then we take a reversal signal, bullish bearish engulfing at a resistance, evening star at a resistance, and bearish engulfing in a resistance. For swing trading, an excellent understanding of impulsive and corrective moves are required. Whether you are an ABC swing trader or 1, 2, 3 swing trader or 5-bar swing trader or 7-bar swing trader, doesn't matter. But my advice to you to start developing this type of trading style, which is a little bit challenging than trend trading, is to initially, even if you draw the peaks and the troughs and the zigzag and the Fibonacci time, these vertical lines in blue is the Fibonacci time, and this vertical line in pink is the Fibonacci time I have drawn, and exactly on those Fibonacci times, market actually reverses after printing a higher top and a higher peak. So this peak is higher than the previous one, and this trough is higher than this one. So my advice to you is to actually go in the direction of the trend, even if you are doing a swing trading. Amateur versus professional approach in trading. Amateur and professional, when they both start, they don't know. But the amateur fellow, because of his all those history, psychology, physiology, and philosophy, he will start with the question, does it work? But a person who is not probably hampered, his upbringing is good, his mental balance is good, good chemicals are produced in our chemical factory called brain. How does it work? How can I make it work for me? This is the difference, mate. This is the difference. Then the amateur will be distracted. But supposing someone is a distracted amateur and he actually wants to be a professional, what are the requirements? The knowledge to get trained from a professional like me, and then the faith in your ability that you can do it. And of course, you need to have the fire and the focus, the passion and the love towards this business or the game. Now, elements of trade plan. You must have heard of the old saying, fail to plan and you will plan to fail. That is why it's so important to plan all your trading activities. So the first point is know yourself and your trading skills and knowledge, as discussed in the previous slides. Write down your money, risk, account, portfolio management. I told you already. Write down your entry, stop loss, take profit criteria. If you don't know the strategies, you can be trained on the strategies. It may so happen that initial demo or paper trading, let me tell you, will not guarantee that you will have success when you begin trading real money, but it will give you the confidence on the system that you are using to trade. Practicing or trading based on trade plan will develop enough skill so that you are able to make trades without second guessing through automatic brain. There is no such thing as winning without losing. That's why we have cost of business. When I started as a professional trader, I knew the probabilities or profit factor of my trading system. By letting my profit ride and cutting my losses short, I do incur some cost of business. but I know that I will win the war. Most traders I have seen do exactly the opposite. Alright, so sample trade journal, you can develop this simple Excel worksheet. This is a demo, this is a paper trading journal, and one column is date, the next one can be automatically from Excel. It will tell you the day, either you are taking the 1% or 0.5%, what type of trading it is. It can be some nomenclature, what currency, are you going long or short, what is your entry point, stop loss, exit points, and are you making money in this, or you had a cost of business. So here in your sample, 3 of them are having cost of business full 1%, and the profits are, as you can see in front of you. And this is extremely important to understand the factor of PEEP cost. Thanks, Ray. Can see the cursor. Wonderful. So PEEP cost. PEEP cost is required to calculate if the term currency, we have base currency, we have term currency. If the term currency or the counter currency is not your account currency, then you need to calculate the PEEP cost to get the correct position size. Otherwise, you can make or you can lose more than 1%. So this journal actually will tell you number of winning trades, cost of business trades, total profits, total winning till date, percentage winning trades, cost of business, blah 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 blah. This is extremely simple. So let's take an example of what is there in the Excel. So gross profit, let me define profit from all profitable trades, which Excel will automatically calculate. Gross loss as the loss from all unprofitable trades, cost of business. So what is net profit? Difference between gross profit and gross loss. What is the profit factor? Profit factor is an index of trading skills. It evaluates the relation between risk taken and results. If your trading results are good, your profit factor will be higher than 2. Below this figure, you need to review your trading even if you are making profit. In fact, a profit factor lower than 2 shows that the risk you take to increase your capital are too high. In the medium term, you may be a trader with a profit factor lower than 2 is statistically doomed. The risk, sorry for that, the risk being too high to make a profit. Absolute drawdown is the initial deposit minus, supposing you start at 10,000 and then go to 13,000, and then you're a brilliant trader, go to 15,000, but then law of average takes over you, and then your account comes to 12,000. And then even goes to 18,000. So the difference between 15,000 and 12,000, 3,000 is the absolute drawdown. Now let's take an example. Gross profit $940, number of profitable trades 60, gross loss $360, number of non-profitable trades 40, net profit 580 as per the definition, total number of trades 100, profit factor 2.6. Wow, this system is bound to make money. In my next seminar, I'll talk about another factor, which is mathematical expectation, which is very important. All put together. Now is the time to all put together. First, define yourself in terms of your basic characteristics and where you are in your trading understanding. Identify and write down your challenges in terms of your fear, greed, patience, risk, discipline, and control levels. Remember, we are made of blood and bones and flesh. We are also made of fear and greed. Learning to trade is a complete journey, and it may take months or even years to plug all the gaps. It's a total process as a whole. Choose your asset class as I show you, instrument, time frame, and style of trading. Getting mentored by us would leapfrog your accomplishment. When I started my career 10-12 years back, there was no mentor. But if you take help of NP Financials, Go Market, because we have a deal, you can actually leapfrog your accomplishments. Maintain a trade plan and learn from the mistake. It's a good idea to do all the mistakes in your demo account and never repeat those mistakes in your live account. If you are determined, then you will find ways. Otherwise, there will only be excuses. Sorry for that. All right, so this is my 4-hourly trading strategy. I have defined myself as a very visual person. I'm extremely visual. That's why all the indicators on the strategies and the systems I have developed are basically color oriented. So because one of my students is 79-year-olds, so we need to see blue color or a combination of blue and green and sky to buy. So this is a weekly chart, 4-hour US yen. We buy here, and based on a rule, either we can book profit here or there on here. That is a skill. Booking profit is a skill. Entering and putting a stop loss is nothing. So in another one, Aussie, we got the first blue in histogram here. I call them histograms because they look like histogram. I buy it. Either we get out here or we get out, book the profit here. What happens in the first price movement? From 119 to 121, we got 130 pips, and in the second one, we got 100 pips. So in the two trades, we got 230 pips. Generally speaking, I give my students 8 currency pairs and 4-hour and 12-hour and 24-hour trading strategies. Let's see in 12 hours what happens. Again, the blue and red. Blue along with other criteria means buy. That means we are buying here. Blue buy, and red means sell. We sell here, we sell here. And I have specially designed a concept called turning point, and I tell my traders what is exactly the term turning point and how to define them. So price movements out of these 5 trades in front of you gave us a result of 860 pips. So that was in 12 hours. And this one here is a trend trading strategy in a daily time frame. Those of you who are working 9 to 5 can actually do good in this daily time frame. This was a cost of business on the 8th, and then this was a profit, and this was a profit, and I have developed a special kind of hook entry in which we take a inverse histogram hook entry to go long. All right, the special offers only to Go Markets client is we have at NP Financials different ways to train you to develop your skills so that you can at least get started and go to the most advanced level. So we start with basics of trading. You can start with one-on-one coaching, or I love my Trader Foundation, because in Trader Foundation what I do, I give 44, not more. But 44 is very simple. If close is greater than open, that's a bullish bar. That's one of my rules. You know that. So 44 rules to master, and if you can master those 44 rules, very few things you would require. Moving on. But if you are a serious trader, you want to do more kind of markets, you need to do my 9 months trader mentorship program or advanced trading progression, which is 9 months, mentorship program 6 months, and professional trader development is 12 months. I help my traders to develop their custom coding if they want to, and if they want to do this share trading, I help them to develop their scanning system, which will help them to scan maybe 30,000 markets in seconds. And also I'm big on developing trading system with your idea or with my idea. So the special offer is if you enroll any service from NP Financials, you get a humongous discount only because you are with Go Market clients. Supposing, for example, you buy a product which is $1,000, NP Financials will actually fund your Go Market live trading with $300. So that's supposing you're buying $10,000. So then in that case, $3,000 will go to your fund, live trading fund in Go Market. Similarly, for the serious one or for the intraday trader, supposing you want to know the markets and dynamics, these are small duration courses. Mapping of markets or demand supply. This is extremely important. See the lines and see the price action. See the price. Everyone talks about price action. I actually don't talk that. I say you need to understand bar by bar what the price is doing, bar by bar. That's why my histogram tells me bar by bar where to buy, hang on to my profit. Still I see something reversals. And of course, market structure, you can learn from the market structure and dynamics of the market. And again, supposing you are buying something which is $5,000, your $1,500 will be actually going and sitting in your live account in Go Market. All right. Sure, those are the, you can also go to npfinancials.com.au to see these services and enroll from there. We have a trading competition running. Please provide your understanding and interpretation of how you can start your trading through our step-by-step approach in details. The winner will get 30 minutes mentoring sessions with me. Please submit your entry at support@gomarkets.com.au, and I was told that you can do also support@gomarkets.com. Both of them will land in their support, and then Go Market will discuss with us, and we'll discuss together, and then we'll give you the trading session at your convenient time date in which we are available. Okay, now is the time to ask question before I thank you in a big way. So please go ahead and ask questions, because client participation here is you have not asked questions, so probably you have now it's your time to ask questions. Please go ahead and write your questions. She is asking, when is the last day for competition? That's a good question. So the last day of the competition is the end of this month. That's a good one. After the question answer session is over, I request Yazdi to conclude this session. I'll hang on for your next questions. Come on, Steve, Chino, Sarad, Ram, Louis, come on, and Kenneth, John, Colin, Iboru, whatever you have questions, ask. This is your time, mate. Time is money. Colin is saying, keen to understand you're using candlestick in context further. Yeah, absolutely, not a problem. What you can do, Colin, you can go to our website, npfinancials.com.au, and then we have candlestick courses also. Of course, you cannot see here because this is only a screenshot. More is there in the website. So if you go to the services and trading, you'll have candlestick session and Fibonacci as well. Yeah. Thanks, Sri, for mentioning Fibonacci. You want to learn Fibonacci? Absolutely. Steve is asking, do you trade spot gold? Yes, spot gold as a currency I trade. Some people consider this as a commodity, but spot gold is actually, nowadays it is XAU USD. So USD, it is traded against USD as a term currency. Tino is asking, just to check, does Go Markets offer a demo account for practicing? Yes, of course, and probably Yazdi can answer this question better.
Yes, just head to our website. You will see a demo account. All you need, just your email address, phone number, and your name, surname. You'll be sent an email with the instructions how to download. We'll also create a username and a password for you. And to help you install the software and placing a few trades, get used to the MT4 platform and the markets that we have, one of our account our account managers will give you a call, and you can arrange a time and a date with him where we can go through the platform.
Tino says, thank you. Thanks, Yazdi. Your next questions. You can take time and post me your questions, or post to supports@gomarkets.com.au. And I talked about trader competition. Please participate so that you have a 30-minute session with me. And if you have run out of questions, very big thank you to all of you, and I appreciate if you take the first step. Thanks, Sharad. Thanks, Tino. Thanks, Steve. Thanks, Sri. Thanks, all of you. Thanks, Sri. Thanks, Sharad, and every one of you. And I now hand over to Yazdi to conclude.
Okay, thank you very much, Partha, and thank you
you.
very much all for attending. Um, Now, if you've got any questions, I'll give you, you have the support email address, and here's my email address on your screen. And if you want a recorded version of this webinar, just shoot me an email. And yep, you will receive that by the end of this week. Now, what we do differently from pretty much most FX brokers is we understand that from someone applying for a demo account, one needs to be engaged, and having an account manager is one of the best ways to do that. The account manager will understand how you trade, what level you are in terms of trading, and obviously it's not just about trading, it's about the other services, whether you want market updates, you're interested in receiving technical analysis or fundamentals, whether it's on a weekly basis, on a daily basis, we'll be able to provide that. And the spreads, of course, when you're trading FX is very, very low. And if you look across, if you do a comparison across the industry, we are among the lowest. So it's a combination of both the cost of trading as well as the service that you receive that stands out with Go Markets. Okay, I think we got a couple of minutes to go. So if you've got any questions, you can all type it in or send me an email personally or support.
Thank you, Sri, for saying fantastic session. Thanks, Partha and Go Market. Thank you very much. Thank you, Sarad. Thank you, Steve. Thanks, Colin. Thanks, Tino.
Okay.
Tino says
thank
thanks
you all.
again.
Thank you again. Have a very good evening, everyone, and we hope to see you again very soon. Thank you.